Welcome to part 3 of BRWM's US report. Last time we found out how, instead of entrusting their savings to active fund managers, investors here in the States are increasingly choosing passive funds instead. We've spoken to 2 US companies who firmly believe in the passive approach and are now trying to persuade customers in Britain that it's the best way to invest. Passive investing is big and growing in the US today, but it didn't happen overnight.
It was simply a matter of education, that people didn't understand the corrosive effect of investment fees. They didn't understand how difficult it was to beat the market, and most importantly, that they didn't understand that the guy who had the best returns last year or the last decade is not necessarily the guy who's going to have them going forward. I think that Americans are very slowly beginning to understand that.
When Vanguard launched its first index fund in 1976, passive investing was virtually unheard of. Today, investors trust the Pennsylvania-based company to manage $1.8 trillion worth of their assets.
Nobody liked it at the beginning, and think of how times have changed today. The indexing business owns 25% of all the stock in America, counting the pension holdings and the mutual fund holdings. It's 20% of mutual fund industry assets, equity fund assets in the U.S. mutual fund industry. So it's become a major force. And if you want to hear a really stunning number in the U.S., in the last 5 years, people have put $500 million into index funds, passive index funds, and taken $7 million out of actively managed funds.
As well as visiting Vanguard, we've been to Austin, Texas, home to another company that espouses the passive approach. Dimensional specializes in the small companies sector.
When we first started, people said, look, all this tests on market efficiency, all these tests were done on large cap managers because there weren't any small cap managers. So we feel confident that in the small cap area, that's the area where they'll be able to add value. But if you look at our evidence over the last 30 years, there are very few small cap funds that have done as well as we have in terms of performance.
Both Vanguard and Dimensional are now bringing the passive gospel to the UK, where active fund managers dominate to an even greater extent than they do in the US.
When we first opened our London office in 2009, we had 3 employees there. And I think in the first couple of months, there were 100 different articles written about us coming to the UK. And I said that was the best press coverage per employee of anywhere in the world. And what it really underscored for us was, I think the British financial press saw, we call it the Vanguard effect. Bringing somebody like us into the market would put a much more focus on cost, diversification, quality of service, and so forth. And we think cost is a really important part of investing, and all else being equal, low-cost investments tend to beat high-cost investments. And I think the UK was hungry for that.
Our forecast going forward, we'll see more and more of the money invested in the UK moving toward passive. The advantages are just too strong. As people become better informed, you see more and more people saying, I'm going to give it up. I have not succeeded in the past trying to invest actively. I'm going to give up trying to do that. I'm just going to go passive where I can be sure that that I will beat the average active investor.
But no one we spoke to expects passive to catch on in Britain straight away.
Human nature being what it is, I think that people are more interested in excitement and the idea, the potential for higher returns, and the fact that the financial services industry is basically a sales-driven industry. They will always continue to come up with investment products that tempt people. The passive investors really are the ones who have to ignore that noise. The evidence shows that the passive strategies, on balance, over time, are going to deliver higher returns with less risk.
Once you start looking into it and you read a book, it might be John Bogle's book, I have several books out there, there are many good books about passive investing. You start reading these books, it leads to another book, and it leads to another book, and it leads to another website, it leads to another video, and all of a sudden you have like what I had, which is a chemical reaction. And you say, I get it. The light comes on, and once that happens, you change, you never go back to the other side. And that's what will happen in Europe as well.
That's it for part 3. Join us for our final part, when we'll be looking at how to build a passive fund portfolio.